Guys, last week there were three important US economic data releases: non farm payroll, unemployment, and surface PMI. All of them were positive and well above expectations, but strangely enough, both crypto and stock prices went down. In this video, we'll look at one possible reason why stock and crypto prices are red, which is the latest results of the earnings reports from American companies, around 50% of which have been released so far. I'm Sylvester, and this is a Crypto Ice Cream channel. Let's enjoy today's ice cream. To begin, it's important to note that for crypto, price decreases can also be due to correction. In the past few weeks, the price has been continuously green and above the moving average. So it's only natural that some market participants wants to secure their profits on paper. This is normal and not just exclusive to crypto, but it happens in all investment assets. However, it seems that the earnings report so far have also played a role. Well, let's take a look. This is a summary page of S&P earnings reports so far. Out of 500 companies, half have already released their earnings reports, meaning there are already about 250 companies, and the data is already substantial enough for us to see the overall performance of the industry. Out of these 250 companies, 70% have earnings per share above analyst predictions. Is this good? Well, it is good, but not as good as compared to before. In the last 5 years, 77% of S&P 500 companies reported EPS above average. It's the same with the percentage increase in earnings. In another report, the average increase in earnings among these companies is 0.6% compared to before. Is this good? It is good, but far than the 8.6% increase from before. Well, let's take a look at two charts. The first chart shows the growth of earnings or net income from S&P companies in this report. And the second chart is exactly the same, but it shows the gross revenue or gross income. On the x-axis, we can see the performance of S&P companies based on the industry sector. From left to right, there's the energy sector, the industrial sector, and the communication service sector. On the y-axis, it shows how much the earnings of companies in each sector have grown or decreased in the earnings report. In percentage terms, the lowest is minus 25% and the highest is plus 20%. Now take a look at the consumer discretionary sector. At first glance, it looks good, with a high gross revenue increase of almost 10%. But if we look at the earnings of net income, it has decreased by up to 20%. Consumer discretionary is a general sector and includes many technological and food and beverage companies, such as Amazon, Chipotle, Caesar Entertainment, Domino's Pizza, eBay, Expedia, Home Depot, and McDonald's. So the conclusion of this video is the earnings results are not so good. And why is that? Well, the average performance of the companies is still increasing, that's good, but the improvement is smaller compared to their previous performance. We'll see the details later. And second, the revenue of the companies is still increasing, but the key is that their earnings are actually shrinking. What's the difference between a company's revenue and earnings? So, revenue is a company's gross income, while earnings is the company's net income after deducting expenses, taxes, and loan of interest. This seems to be one of the key indicators of the current economic and macro conditions. Well, this data is a hint and proof of the high inflation in America. And why is that? because three of the revenues are reducing components, expenses, and interest reflects the high and low inflation. Examples of expenses are employee salaries, raw material cost, well, building operational cost, and etc. These are components that are directly impacted by inflation. And the interest component is also the same, impacted by an increase in the federal funds rate. Well, the big picture shown from this report, in my opinion, is that people still have a purchasing power, yeah, because the revenues are still up, as evidenced by the majority of companies' revenue, which is still increasing. But they are increasingly purely due to, is that increase due to purely due to stronger purchasing power? I don't think so. Well, some sales numbers can increase because companies have raised their product prices. So they raise it because of inflation, of course, because raw material prices have gone up. So product prices, well, they adjusted the product prices accordingly. As an example, if I'm a bread seller and I usually sell 100 bread in a day, and I sell each bread for 500 for $5 a bread, so my revenue is $500 per day. But because the raw material price have gone up, well, maybe the flour has gone up, so I'll raise the bread price to $6 a bread. And because of the price increase, my sales have decreased to 90 breads per day. So now, after the price increase, well, my revenue is $540. On paper, my revenue or gross income has increased from $500 to $540. But in reality, my sales numbers have actually decreased. Well, the second big picture is net profit or earnings for these companies is decreasing, eroded by inflation. Gross income may increase, but after deducting cost, it turns out that the pockets are becoming smaller. The impact of high inflation is still evident, happening to big companies. Well, this fact might be the one of the main considerations for some big companies to launch downsizings or layoff movements in 2023, this year. And this might also be the source of data that makes the market nervous. On one hand, employment data remains strong or even becomes stronger. But on the other hand, the impact of inflation is also increasingly visible on the bottom line of the big companies. Well, this may be what Jerome Powell often referred to in his speeches as entrenched inflation. Inflation that is stuck and difficult to remove from the economy. Well, the conclusion is, will this condition of these companies make a crypto return to bear market? Well, in my opinion, no, it won't. This data will make market optimism wake up to reality that it's not that easy to move on from the inflation condition. Right? But it's not also strong enough to cause a panic among investors and markets and trigger a sell-off hysteria like last year. I personally see this data as a sign that the economy is not yet okay yet. It's not going to be a bull market run again yet. But it's also a sign that the economy is not as bad as many analysts predicts. For crypto specifically, this condition seems to be a recipe for high price volatility. But it seems to me that as long as the internal crypto industry is calm, nothing black swan about it, and without excessive fears like last year, the crypto prices can relatively be maintained sideways, well, in a daily time frame. And that's my opinion. What about yours? See you in the next Crypto Ice Cream.